Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to CSC. Good evening. Today is Tuesday, October 7th. I'm Huang Pengrui. Today, we'll be discussing a few topics. First, as we saw yesterday, there was the OpenAI Developer Conference. At the conference, Altman mentioned several stocks, and almost all of them saw an increase. We can see that in the past, during NVIDIA's conferences, NVIDIA's partners, or companies that co-developed with them would also see their stocks go up. Now, this situation has shifted over to Altman's side. Let's take a look at this. We'll look at OpenAI's current strategy, and then we'll briefly introduce their developer conference. After that, we'll discuss yesterday's collaboration between OpenAI and AMD. It seems like only a select few are happy about this, so I'll also talk about what impact this happiness among a few people might have on the market. Next up is, a lot of information is starting to show that market volatility may increase at the moment, but volatility doesn't necessarily mean the market will definitely go up or down. So right now, people might be a bit concerned about this. At the current level of the stock market, let's take a look at whether this concern is something we really need to panic about. Actually, even though there's more and more discussion about this lately, and more people are talking about whether there's a bubble or something like that. For now, overall, I haven't really seen any clear signs that the structure of the stock market is going to change. So, for the most part, the current structure remains the same. Alright, so as you can see, this week has been pretty quiet. Some data that was supposed to come out today has actually been delayed by the government, so we'll just keep watching and see what happens next. Alright, let's take a look at the US dollar index. The dollar index actually saw a slight rebound today, mainly because both the euro and the yen have dropped. Right now, the US dollar is also in a bit of an information blackout, since the government is shut down, so a lot of data just isn't available. So for now, we'll have to wait and see what happens next. The only timely data we have now comes from corporate earnings reports, and those will start to be released one after another by several companies soon. Alright, next let's look at the performance of US Treasury yields. When it comes to yields, there's actually a sign of a slow upward trend again. If we look at long-term bonds, it's really hard for yields to come down. A few days or months ago, yields dropped to nearly 4%, but then they started rising again. Right now, they're still in a slightly upward range. This is the case for both the 10-year and 30-year bonds. There's a persistent upward pressure, or at least pressure to keep yields at relatively high levels. As for the 2-year yield, it has basically already priced in the remaining 2 rate cuts expected for this year. So, it's likely to stay around this level for a while, and it's relatively difficult for it to go much lower. Next, let's look at how the stock market indices performed yesterday. First, the S&P 500. Yesterday, the S&P 500 still went up, and overall, it's still showing an upward trend. Although there was a slight dip here, there were also 6 relatively long lower wicks, so overall, it's still a positive upward structure. The Nasdaq is showing the same pattern. It's pretty much the same situation, so you can see that overall, the indices are still stable and are staying above all the key moving averages. Alright, next let's look at the latest updates. First, we can see that Trump, during his conversation with Brazil's President Lula, didn't really discuss any sensitive topics, nor did they talk about any concrete actions. For example, things like easing relations or resuming some trade activities and so on. But the main point of this conversation was, the progress made was mainly in easing tensions between the two sides. Before this conversation, Bolsonaro, the former president of Brazil, had a good relationship with Trump, as their political stances were quite similar. As for Bolsonaro, he's currently in Brazil because he's facing charges. This insurrection is still under investigation. So at present, if the United States and Brazil can set aside their political differences and focus on trade, there is room for negotiation here, because if the political stances remain divided, it's really hard to make any progress. If we look at it now, after Trump talked with Lula, he felt the conversation went pretty well. So, moving forward, there might be some room for compromise. On the other hand, there's the political turmoil in France at the moment. President Macron has given the Prime Minister 48 hours to see if there's any solution. But if no solution is found, Macron has three options. First, he can appoint a new Prime Minister. Second, he can hold parliamentary elections. Or third, he can resign. But he has said he doesn't want to resign, so that leaves the first two possibilities. However, if he keeps appointing new prime ministers and those new prime ministers keep getting rejected or fail to pass a vote of confidence, then it's basically pointless. So, looking at it now, he might also choose to hold parliamentary elections, but if he does, there's actually a chance that the current government could. There could be a pretty clear victory. Now, if we look at the chart in the lower right corner, it shows the current spread between French and German bonds. You can see that the spread on French bonds has actually increased over the past few months, which means that right now, the situation in France is relatively unstable, and it's expected that this will also affect others. The bond markets in Europe and the US will be affected to some extent, so this also helps explain why, for example, one of the reasons US long-term interest rates have remained relatively high. In the lower right is the latest move by the US government. We discussed this a lot yesterday, and originally thought the US was going to invest in critical metals, but it turned out they were actually investing in trilogy metals, not critical metals. So, these things are very much policy-driven and event-driven. At the moment, we can say that the overall trend in the US is toward national capitalism. It's starting to really get moving. They're beginning to review a lot of companies, pick out the winners, and support them. As for trilogy metals, it's also involved in mining in Alaska. So what are the details? Well, here's the thing. The US Department of Energy will hold a 10% stake in it, and in the future, they can use warrants to increase their holdings by another 7.5%, so in total, they could freely own up to 17.5% of this company. Additionally, they will invest $35.6 million in the Upper Kobuk mineral project. As for this place, we'll take a look at it in a moment. It's located in Alaska, and this mining area is jointly owned with the Australian company South 32. These funds will accelerate the development of this mining area, and in addition, they will also build the road that connects the mine to the outside world. However, as for the current situation regarding rare earths and other critical minerals, next up is the current US government shutdown situation. Actually, just yesterday, Trump did soften his stance for a moment. He said he might negotiate with the Democrats on healthcare, so the Democrats, of course, welcomed this news. But then Trump mentioned that negotiations on healthcare still couldn't happen yet, and that they would only talk after the government reopens. So for now, healthcare is a pretty big deadlock, mainly because the Republicans want to implement some cost-cutting measures, while the Democrats want to keep these measures in place so that everyone's premiums can be a bit lower, and then the coverage of healthcare could be even broader. Right now, the Republicans feel that they hold a slight majority in both the House and the Senate, so they don't want to negotiate with the Democrats, and instead, they try to shift the blame for the government shutdown onto the Democrats. But the Democrats, they're also standing firm and have no intention of compromising with the Republicans, so at the moment, the government is stuck in this stalemate. So now, the Republican strategy is to wait for the Democrats to pass the vote themselves, to back down, and after this bill, which would temporarily extend government funding, passes, the government can reopen for now. After reopening, both parties would then discuss the healthcare issue again. But right now, the Republicans want to see some results on key issues related to healthcare before they vote to reopen the government, so that's the current situation. As things stand now, Trump originally had softened his stance, but later on, it seems like his attitude has shifted again. So at the moment, both parties are still deadlocked, and the government shutdown is likely to continue. Alright, so this is Trilogy Metals, and you can see the location of its mining site here in Alaska. It's a vast area with many different mines. Currently, you can see that. Originally, it was thought to be an investment in critical metals, but later, Church Metals focused on the Adasha mine, also emphasizing this system of key mineral resources. Alright, so as for Children Metals, its stock price has changed. After hours and now pre-market, it's up by about 200%, over 200% actually. So you can see this kind of. The investment opportunity really comes down to the end. As for what to do next, if you want to track it further, you probably need to pay closer attention to the actions of the US government and the release of information. This way, you can see that yesterday, there were actually quite a few upper wicks on the candlestick chart, which means. As for the stock price, it actually hasn't revealed much information either. You really have to wait for the official news release to know what's going on. Alright, next we'll look at other government developments. Currently, the government official in charge of AI and crypto, David Sachs, mentioned that he is also part of the hawkish camp. He advocates that promoting US technology exports helps curb China's influence. So why was there this response? It's because from last weekend to Monday, some of the more hawkish voices within the US government regarding China felt that the US government allowing chip exports, or starting to cooperate with China, was a compromise. They believe that America's competitive position will be weakened because of this. Now, the official in charge of AI and cryptocurrency affairs has come out to respond. So, this export actually helps to strengthen America's technological leadership. David Sachs is also one of the people within the government who defends the export of NVIDIA and AMD chips to China. As we all know, right now NVIDIA and AMD are exporting chips to China. In theory, it's possible, but the government wants to collect taxes. As for how exactly these four companies will proceed, there isn't a definite conclusion yet. We might have to wait until the leaders of China and the US meet, possibly as soon as this month, so there may be more updates after that. Additionally, Davis has also defended Jensen Huang, because previously Jensen Huang, he had criticized, albeit mildly, the reluctance to export American chips to China. Some people believe that they're actually holding America back in this way. Davis pointed out that these people at PP, he questioned what contribution they've actually made to America's success in AI. Then they said that Beta and the Chinese community are strategic assets for the United States. So, at present, you can see that within the US government, there is still an advocacy for conditional exports, aiming to maintain technological leadership. If American technology can be widely adopted around the world, it will be beneficial for the US to maintain its leadership position. That's the current mainstream view, and the narrative is developing in that direction. Alright, next up are some market updates. So, a well-known fund manager mentioned on Port to the Job that the stock market might surge significantly, and he used the term blow-off in English. So this kind of sharp rise is called a max rally, and he mentioned that the extent of this blow-off could even surpass what happened in 1999. That's his perspective, so you can take it as a reference. He believes that market peaks usually occur about a year after hitting new highs. He also has some advice for investors during this period. If you're investing now, you need to act quickly and move fast. If you don't get in, you might miss out, but if you are already in, you need to stay alert and cautious. Overall, he also believes that the current bull market isn't over yet. Next, as is customary on CNBC, he has to talk about AI. Right now, it's still a game that only a few people are enjoying. You can see this with companies we've mentioned before, like NVIDIA, as well as partnerships in companies like Oracle. He thinks that currently, the environment is like this: NVIDIA provides the funding, and then everyone uses it to buy their chips. They process and help OpenAI build a lot of infrastructure, and also provide things like computing power. AMD and Broadcom are involved in this sector as industrial suppliers. As for OpenAI, its main role is to meet a lot of massive demands. These few companies together make up the core of real AI right now. The computing power and resources are concentrated in these places, so if any of these companies have issues in certain areas, that could put some pressure on the economy or the entire industry. So basically, right now, the direction of the economy or the development of the industry is being driven by just a handful of companies. This means the pressure on these companies is actually quite high, and overall, the situation is, whether it's capital or resources, the distribution will become even more uneven. And then as for OpenAI, why is it working with AMD? It's because it still lacks computing power. It can no longer deliver many revenue-generating features in ChatGPT and other products. So this means that if ChatGPT or OpenAI had more computing power right now, they could roll out more paid features, which would further increase their revenue and improve their profitability. So in reality, the current situation is a shortage of computing power. And you can see that even though this shortage situation won't last forever, it won't end in the short term, so going forward, the AI supply chain will still be a main focus for investment. Next, we can see that AMD seems to be the second company whose fate has been changed by OpenAI, the first one being Oracle. Alright, so let's look at more details about AMD. Next, there's a news report mentioning that the current P/E ratio of semiconductors is close to 3 standard deviations above the average. In addition, there's an indicator explaining that the 14-day Relative Strength Index, RSI, for momentum is now approaching a level that suggests a pullback. So what does this mean now? It just indicates that with these numbers, or rather, with these indicator levels, it only suggests that the current rally might be a bit stretched in the future. But it doesn't mean that prices will fall. So everyone should just be aware of this, as mentioned in the report. Alright, so from this we can see the current situation. For MB, its profits are expected to increase significantly. You can see that the blue part represents its revenue before it announced the partnership with OpenAI, and the yellow part is its revenue after including the OpenAI collaboration. Doesn't this look a lot like what happened with Oracle, when it? Before the Spain order, everyone had revenue expectations. After the OpenAI order, forecasts changed, that's the feeling. So now, AMD looks like Oracle then, the next company whose fate is changed by OpenAI. Also, here is a comparison chart between AMD and others, showing the upcoming product iterations and their deployment timelines. In the future, we can pay attention to a special situation, which is that starting in 2026, then AMD will also begin launching rack solutions. So, to answer, that's from the first half of this year to the second half. It was originally planned to be launched by the end of last year, but because the rack solution is actually quite challenging, there was a bit of trial and error in the early stages. Now, with things going smoothly this fiscal year, it will be launched by the end of the year. So, moving forward, let's see if AMD can continue to roll out its rack solutions. Currently, its collaboration with OpenAI. My answer now is that there has been investment and also equity acquired. In his case, it was actually OpenAI that took equity from him, but what he gained was recognition from OpenAI. Next, his revenue is expected to grow, and in today's manufacturing sector, he is. Compared to the answer, he is actually a very small company, and through this move, he has received recognition from OpenAI, so for him, this isn't a bad thing at all. Moving forward, aside from OpenAI, there will be many other companies that are more likely to sign contracts with AMD in the future. This is because, as we all know, there is currently a shortage of computing power, so companies that are able to provide components or resources related to computing power will naturally stand out. That's also why, at present, all providers of computing power and related supply chain companies are still experiencing an upward trend. Alright, now let's look at AMD's stock performance. Yesterday, it actually went up quite noticeably, but there was a big red candlestick, which means a lot of people were selling during the breakout. So, we'll need to keep an eye on how its stock price moves in the next few days. Currently, in pre-market trading, it's showing an upward trend. Next, let's take a look at, not to mention, the semiconductor sector. The current P/E ratio is almost approaching 3 standard deviations above the Excel average. So you can see that right now, for the semiconductor sector. Yeah, the P/E is relatively high at the moment. So, as we can see, the overall valuation level of semiconductor stocks is at a relatively high point, and we'll need to keep monitoring it going forward. In addition, as for the 2-week strength indicator RSI that was just mentioned, it's now also at the same level as before the last market pullback. So everyone should be a bit more alert, because at the moment, actually, this indicator is showing that currently, the stock market trading activity is quite heated right now. Also, as previously mentioned, we can see that the overall trend of the VIX is moving upward. Its highs are getting higher, and its lows are also getting higher. This is something for everyone to take into account regarding the current situation. There are still many uncertainties ahead, so after making sure you have some protection in place, we still need to move forward bravely despite the uncertainty. That's the point. Alright, in addition, Citi also mentioned that currently, where is the most likely place for excessive profit-taking to happen? Most likely, it would be in US tech stocks, with the Nasdaq facing the greatest pressure among them. As for the Nasdaq 100, it actually hit new highs, mainly driven by AMD. So at the moment, the overall structure of the Nasdaq 100 is relatively solid. This is based on Citi's weekly statistics. Regarding the flow of funds, he mentioned that the futures flow is okay. He said that currently, on the Nasdaq 100 side, there are relatively more new short positions. Overall, the position is around break-even, and there has not been any significant net inflow or outflow. For example, for the Russell 2000 and the S&P 500, there have been more obvious inflows. So this is the current market dynamic. Alright, so moving on, we can see that next we'll be talking about and introducing other people's perspectives. This is an article that Theta Deal published yesterday, where he mentioned that currently there is a possibility of tail risk, but this tail risk could come from anywhere. The ongoing government shutdown is, in his view, actually a relatively high risk and hasn't been fully priced in. That's because people have always thought that if the government shuts down, it will just resolve itself after a few days, and there wouldn't be any lengthy or drawn-out delays. But right now, as we just mentioned, both the Republican and Democratic parties seem to be pretty stubborn, so at the moment, they haven't seen any signs of reconciliation. This risk may still not be fully priced in. If Medicaid is repealed, 20 million people will see their premiums go up, so that's actually quite a lot. What's interesting is that over 80% of the affected areas are in states governed by the Republican Party. So right now, it's actually people in Republican-led states who will be more affected, but this policy was actually proposed by the Communist Party. And then, he also cited a paper in which he mentioned that the tariffs were announced around April or May this year, and the biggest impact on employment usually comes about 4 to 5 months after the news breaks, which is basically right around now. So currently, we're seeing some signs of weakness in employment, but this situation is because both hiring and the number of unemployed people are declining, so right now, it's basically because both supply and demand are decreasing at the same time. So, when you look at the overall employment data, you don't really see any significant changes. So if we look at the current situation, if tariffs are having the biggest impact right now, then going forward, this situation should gradually improve. Plus, we still have this kind of support in place, and this expectation is set to continue all the way through 2026. So overall, at the moment, we don't need to worry too much for now. As for the current market, it's actually not being driven by broad-based capital. In other words, it's not like all stocks are rising across the board, or that every sector is benefiting. The current market situation is that a small number of companies with resources, capabilities, and the desire to win the AI race are driving the stock market's rise. This also clearly shows us, just as we mentioned earlier in response to the OpenAI event and AMD's partnerships, that it's really just a handful of these companies driving things forward. Right now, capital is highly concentrated, and overall, corporate leverage is still not very high at the moment. On the corporate side, their financial structures and balance sheets are still relatively healthy. So at the moment, there really aren't any major concerns overall. On the other hand, though, we should look at another indicator. Institutional investors haven't been buying a lot of stocks this year, unlike last year, so going forward, the stock market still has some room to rise. So what conclusion can we draw from what we see right now? At present, it's just that. In terms of fundamentals or future outlook, we haven't seen any signs that the structure of the stock market is going to change. Overall, things still look relatively stable across the board. However, there are some indicators now that show. One is that valuation levels are relatively high, and then there are some concerns that risks might be increasing, and some people are actually taking certain measures, like hedging or buying some safe haven assets. But aside from that, overall, everyone's outlook at the moment is still relatively optimistic. Alright, so this is what I mentioned about C+6, the collective indicator for institutional investment by this organization. This is actually the AAI, the difference between the bull and bear market spread. Basically, the higher it is, the more optimistic you are about the market outlook. Right now, you can actually see that. This level is still quite low, it's below the midpoint of this year and also lower than most of last year's levels. So basically, it means that Citigroup's institutional investors are still relatively conservative at the moment. Alright. Next, let's talk about OpenAI's Developer Day. What exactly are these developers going to talk about, and what announcements should we expect? How have stocks related to these announcements performed? At the OpenAI Developer Conference, it was mentioned that there are already 4 million developers in the OpenAI ecosystem, and every week, 800 million people use OpenAI. Every minute, OpenAI's system processes 6 billion tokens. So right now, it's a massive system, and with so many people developing and so many users, that's a huge business opportunity. As for yesterday's event, The conference mentioned that going forward, they will open up access through this standard protocol. You can build apps within ShareGPT. This brings to mind an analogy. It's like providing a platform similar to the iPhone, where you can offer apps and make money from them. In the future, developers will be able to earn money through this channel. Yesterday, they also mentioned some case studies from well-known companies, mainly Figma, Spotify, and Salesforce, media, and so on. Let's take a look at how their stock prices have changed. Altman also mentioned that besides these companies, in the future, they will also collaborate with DoorDash and Uber on specialized features. Actually, everyone in this. Before the conference was held, everyone thought, would OpenAI or ChatGPT announce disruptive features at this conference that would severely impact the business models and operations of existing software companies? It seems that OpenAI's solution is to allow AI software to coexist, so is this a new direction? We'll still need some time to observe. In addition, they also mentioned that right now, OpenAI is in a stage of large-scale investment and rapid growth. One day, OpenAI will be very profitable, but that time isn't now. So, it's clear that at present, OpenAI doesn't have any short-term plans to improve its financial structure or become profitable. For now, the focus is on investing heavily and burning cash to solidify its position in the market, as well as developing monetization channels and building partnerships. Alright, in addition, I also mentioned that besides allowing everyone to develop apps, they will also open up the ability for people to create agents. Because building agents is actually relatively difficult, and making a really good agent is quite challenging. So what they do is provide the agent key service to help everyone accomplish this. What can this do? It can help developers quickly design, deploy, and optimize these agents. There are already companies using it, such as Albertsons, Bus, and HubSpot. As for the future, this kind of AI agent service, that is, on OpenAI, you can probably save yourself a lot of hassle, and in the future, there may be even more corresponding AI options launched. In addition, they also introduced this kind of software engineering agent solution, specifically a code-carrying agent called CodeSGA. He mentioned that nowadays, if you want to write or create software, it only takes a few minutes, so the progress is relatively fast. As for now, the internal code at OpenAI, most of it is written by people. Their engineers use Coder to write it. As for this Coder GA product, which was just launched in early August, its user base has increased tenfold. So, at present, it seems there is a lot of focus on software in this area. Even though in the future ChatGPT itself will be noisy, and the operating platform will keep moving forward, it will provide more software services. So this is the current situation with OpenAI. Here are some key takeaways from the Calder meeting. What we can see is that right now, OpenAI wants to create a new business model. They're launching things like the ability to make apps, create new agents, write code, and other services. In the software space, they're not aiming to replace software companies or take over all business models themselves. Instead, they're looking to form new partnerships with existing software companies. This way, both sides can benefit. That's the current situation, but as for what will happen next, we'll have to keep watching. Some people, or some analysts, believe that right now OpenAI can certainly coexist with software companies. Previously, they've worked with companies like SPL and Booking.com, but going forward, if we're talking about OpenAI, it's actually possible that, for example, with Q&A, it could completely help you book things, like booking flights or arranging your itinerary, and so on. So in the future, this. After that, will it be able to completely replace these companies? That's still something to be seen. Alright, so as we saw yesterday when we talked about stocks, they actually share a certain characteristic. The first thing we noticed is that they have a relatively long upper shadow. The second one is Spotify. It also has an upper shadow, though it's a bit less obvious. You can take a look. Next is Salesforce, which also has an upper shadow. And for Coursera, the upper shadow is very obvious. Another one is Trip.com and TripAdvisor. The upper shadow is also quite clear there. Then for Zero, it dropped directly. And then there's Booking.com, which also has a very obvious upper shadow. Next is Expedia, which also clearly shows an upper shadow. So you can see that after these stocks started to rise, a lot of people wanted to sell, and the selling pressure is pretty heavy. As for the future, whether these companies can truly benefit, or whether AI and software can really coexist, still needs to be observed. That's also a possibility. Another scenario we just mentioned is that after OpenAI has more or less integrated all these things for business models together, they figure out how to do all this and then just bring everything in-house and do it themselves. That's also possible. But for now, it still seems like things are moving forward in a more symbiotic direction. Next, let's look at this company, House Spa. It's the same situation, there's a very long upper shadow. Alright, after that, let's take a look at some of the pre-market strong and weak stock tables. Okay, now let's first look at the S&P 500 index. On the gainers side, the main ones are IBA and MD. MD has been rising steadily, while IBA's increase is mainly due to its partnership with Entropy. By bringing Entropy's system into IBA, it can now support IBAN, which has led to a noticeable rise. Other major tech stocks, like Micron, are still on the rise. Now let's take a look at the decliners. The biggest drop is Dollar Tree, which was downgraded, and accordingly, there are some related effects. There's also JNZ and some e-commerce stocks. It seems that the e-commerce stocks are being downgraded due to a drop in buying momentum, and this appears to be because of some of their own operational factors. Let's take a look at the volume section. Aside from AMD's significant increase, we can also see that Nvidia and Intel have also seen a noticeable rise. In addition, other stocks as well. But Google here as well. Let's take a look at the overall performance of the US market, with a slight dip here. At the moment, it does seem that quite a few stocks have shown a pretty clear increase. This is what we've heard from Aaron, who is. It was also mentioned in the pre-market that they have a multi-year AI cloud contract order, but after checking, it seems that the counterparty hasn't been publicly disclosed, so this is something to keep an eye on going forward. For now, the stock price has still seen a corresponding increase, so at the moment, it looks like overall. Looking at the current stock market, it still seems to be in a steady upward trend. So everyone should take appropriate precautions during this process, whether that's mentally or in practical terms, and just keep moving forward with it. That's all for now. Greetings to all our group members, and thank you all for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.